Good morning guys, and welcome back to my YouTube channel. And to be honest with you guys, I do not have any impression of doing this video this morning, but I just want to share my pains and my groanings with you guys, because something happened yesterday which I think you guys can actually learn from. Although I learned from it yesterday, but I think it would be much more beneficial to you guys also to learn from my own mistake, and probably most especially the beginners traders. They can learn from this mistake, and they themselves will not be able to do the same kind of mistake, because there's this saying that it is better for us to learn from someone's mistake than learn from our own personal mistake. And what is the mistake? Before going into the mistakes, believe me, I'm going to share to you a video which will be displayed on my screen, and that happens to be a video of a trade which I took yesterday night at around, let's say, 11 p.m. Dubai time. As you all know, I live here in Dubai, so basically yesterday I already slept off. That is just the story. I already slept off. Then I wake up just around, let's say, past 11 p.m. and I decided to check my trade because I have a pending order on GBP USD for a buy. So I decided to pick up my phone and just to check my MT5 if the order has been activated. But to my greatest surprise, the order has not been activated. So I just flashed into trading view. When I flashed into trading view, I decided to look what is happening and at what point is the price presently. So I said that GBP USD is a little bit far away from coming to the pending orders. So I look into Euro USD and I found a very nice retracement setup on the 5-minute time frame of Euro USD. So price was actually making a retracement, and I saw that price would definitely pull back into a fair value gap before it will continue to drop down to a particular bigger fair value gap which I identified on 1 hour or probably on 4-hour time frame. So now when I saw that setup on Euro USD, so I decided to do a quick scalp on it. So, and as you can see on this video, I will also project the entries, which is the entries I stacked. So I stacked about 10 trades, or 10 positions rather, just for me to do a quick scalp, because I have this small account which I am trading. It's just like $3. I have moved it to around $30. That was on April 1st. I moved it to $30. So yesterday I took a trade and probably I lost maybe $2, something like that, because it's a small account. So that small account, I am just growing it. So I have another account which I am trading. So I took the account to around $30. That was on 1st of April. I took it to $30. So yesterday I saw an entry, and that entry obviously went wrong. So my current balance on the small account was sitting around $28 or $26. So I now took this Euro USD scalp with the impression of losing $5. And if you look at the video which I project, you will see that there's a particular place which I put a green line. That particular place which I put a green line happens to be an area of my invalidation, that if price should get here, I am going to close my position in loss manually. So I stacked like 10 positions, and to be honest with you guys, the 10 positions I didn't put stop loss, because I am thinking within myself rather that I am going to close the 10 positions manually. So I am basically watching the entry from my phone instead of me watching it from my laptop or my iPad. So I was watching it from my phone because it's late. So I do not want to take my laptop or take my iPad. So I was watching the entry from my phone, and the setup was running on MT5. So While I was watching at the trade, as you can see, the trade moved a little bit in profit and retraced back, and suddenly there's this massive push to the downside, which I am going to display the picture here. There's a massive push to the downside that pushed my equity to around $40-something. So because it's a quick scalp, I am risking maybe like let's say 5 pips to go for 20 pips. Yeah, 5 pips to go for 20 pips. So each of those entries for my calculation ought to give me like $2 each, $2.50 like that. So I have calculated that the 10 positions would be amounting to, let's say, $25 if it hits my take profit. And suddenly price move in an aggressive manner to the downside. So when price moved in an aggressive manner to the downside, my equity is sitting around $40 because the initial position is reading like $17. So I now decided that, okay, let me wait a little bit. Maybe it's going to hit my take profit. And before I would go back to MT5 to just go and close my trade, I saw that price move aggressively again to the upside. And the price or the equity was now sitting at maybe around $30-something thereabout. And I am still hoping that price will definitely still continue to push down aggressively. See, don't forget, all my positions do not have stop loss. I didn't put stop loss because I have it at the back of my mind that I am going to close the positions manually. So that's the reason why I didn't put stop losses to each of them. On the norms, if I am trading on my other account or if I am going conservatively, so I always try as much as possible to put stop loss to all my trade. So, and to my greatest surprise, the next thing that happened is there's this big bullish candle that just shows up from nowhere. The bullish candle moves and passes beyond my area of invalidation, which is I intend losing $5. But at this point now, before I would now switch to MT5 to just go and quickly close my trade, believe me, I have lost the account. And I was just able to keep to myself $2. And I kept on contemplating towards that night that what is the reason behind this sudden spike to the upside? And that was what made me title this video that Forex is a scam. Believe me, because I tried to go to Forex Factory, I didn't see any fundamental to back that kind of spike to the upside. It was so painful. And the reason why it's so painful is, personally, I intend to lose just $5. But because of my negligence, because I am accepting the blame, I am not putting the blame on the market now. I am accepting the blame because I am the one that do the wrong thing here. If I had put stop loss to each of those positions, I wouldn't lose more than, let's say, that $5, or probably if there's slippage, I may not lose more than, let's say, $6 or $7. But because of my negligence of not putting stop loss, it cost me losing that account to $2. So I only have $2 sitting in that account, an account which has already moved to equity of $40-something. Believe me, it's so painful. It's so painful. And I just want you guys to learn from the mistake. And this is to tell you that stop loss is very, very important, even if you want to scalp. Stop loss is very, very important. And if you look at the pictures here now, you will find out that at the end of the day, price eventually now reversed to my take profit. After making that aggressive move to the upside, price now eventually dropped down to my take profit. But there's nothing I can do because I already lost the account. So I want to urge you guys, as a beginner or as probably an intermediate forex trader or even a professional forex trader, try as much as possible to always initiate stop loss, to always put stop loss to every of your position. Had it been I have a very huge amount of capital in that same trading account, that is how it would have been wiped off yesterday. It would have been wiped off. So guys, this is the story, and this is the reason why I think Forex is a scam, because there needs to be a reason as to why that aggressive move shows up, but I didn't see a reason. And if you also believe that Forex is a scam, I want you to go to the comment section and share your own opinion. Go to the comment section and share your own opinion if Forex is a scam to you, because it's crazy. Are we going to continue like this? I'm sorry. See you in the next video, guys. Peace out.